Happy Saturday, Auvorians and all the new subscribers. Welcome to the forecast for Trade Week call. My name is Steve Vetterell, or if you're my mother and you're mad at me, it's Steven. On the microphone this Saturday, beginning of the holiday week. So, Merry Christmas, Happy New Year, Happy Holidays, if we're going to be politically correct, everybody out there. Let's do a quick chat check, please. If you could see the risk disclosure screen, which I guess I probably need to reinstall the new logo on, huh? We got a really good logo now, you guys. Pretty slick. Big old changes going on in corporate. Gotta love it. Moving forward, just like the Toyota commercial, right? So let's go through the risk disclosure screen. Trading the foreign exchange market carries high risk and may not be suitable for all investors. Trading on margin and utilizing leverage can carry an even higher level of risk that could lead to a complete loss of investment funds. So before deciding to trade the foreign exchange markets or using any of our software alert products, you should carefully and diligently consider your personal investment objectives, level of experience, and risk tolerance. Most importantly, can you afford to lose the money you're trading? Most important question, besides getting your emotions under control, I'm actually going to show you guys a really cool question towards the middle today. Stick around here next 10 or 15 minutes once I get past all this material. I'm going to show you a cool email that I got from a student that we've been kind of talking back and forth, and he's deciding whether or not to dive into futures trading, from a manual or discretionary perspective. And he asked me actually a really good question. And I answered it. And I'm actually going to share the email with you guys. So let's finish out the disclosure here. If you're sharing any of our results using our software tools, any software, got to do it in designated Facebook groups, guys. Please do not use the term company recommended to settings to anybody. I don't care if you're calling your friend Bob, just don't use it. We don't really have any settings. We're not a brokerage firm. We're not a financial advisory firm. It's kind of what I do on the side. We just license software that you can use however you want at your own risk and discretion. So some of the software does come with out-of-box settings upon initial setup, which you have the ability to customize. That's the purpose of Tyler's call with Gearbox, Dasan's call, and the calls that are going to be coming out of all of the other software developers, including Arrow, which has been doing very well. So that being said, just stay away from the company recommended setting stuff. It's really the bottom line. So let me share our Forex calendar real quick. So there's nothing going on in Forex calendar wise next week. Let me close out of this. Into the calendar. There we go. So you guys should see my Forex calendar. Keep in mind the Q&A window is open. Ask the questions in the Q&A if you could, please. I would highly recommend everybody, if you are not familiar with my Telegram channel or the AP corporate Telegram channel or any of the developers' individual Telegram channels, which they obviously shoot videos on Friday for, I typically like to see what they're talking about. And I'm going to talk a little bit more about that today. But as far as just kicking off the week, this is a holiday week. I am not trading this week just because I'm sort of in and out on different trips with the kids and the family, even though our state is in lockdown. We're making trips anyway. So we're going to do a little skiing later in the week. Do note that my call next Saturday, which I'll post on my Telegram channel, will not take place. So I will put out notes that go into the back office, but there will not be an actual video next Saturday. I'm on vacation skiing. So that being said, this is the Forex calendar. No surprise. Next week's a big holiday. This is actually one of the few times that you'll look at this. Obviously keep in mind I sort the red folders only because I don't really care about the other stuff. And it's showing nothing. Just a bunch of holiday stuff, which is cool. Do note that the dollar is continuing its meltdown, as I have been casting from the mountaintops for many months now. Its movement down I think is a surprise to many, but to those that were doing their technical analysis work diligently, they have been rewarded handsomely. So let's move into that chat. And I'll touch on some of these other tabs up here. Do note that yesterday was quad witching. Many of you don't know what that is, but it's just sort of like an amalgamation of a whole bunch of options and volatility contracts that are expiring in different indexes. I thought this was an interesting thing yesterday. Just a quick peek at the S&P. I'm going to drop it down to a 4-hour chart. Actually, let me show the 5-minute. Okay. So this is a beautiful example, even though this isn't currencies. I always recommend you guys take a look at your primary country or developed markets equity indexes first before you start analyzing other stuff like the dollar and obviously any currencies that are related to it. So we're just looking at the S&P 500. These are the 500 largest capitalized companies in this country. So all the big names everybody knows, Amazon, Google, so forth, Exxon Mobil, all the big names. Look at this rip. And this is what you call a face ripper. This is typically the kind of stuff that happens towards the end of a quad witching day where you have a lot of stuff expiring. Equity markets had a big lift in the fourth quarter. Obviously, that is in heavy part to the stimulus, if you will, by global reserve banks and not just the Fed, but also because of potential bailouts and or package number 2, coronavirus related to that. The House and Senate's hammering out in D.C. So if our respective knuckleheads on the left and right can actually come together on a bill, because we know there's a lot of people that are just getting clobbered in this lockdown. So say some prayers that it lifts. And it's just a note here as far as what's going on in SB. Let's take a look at the dollar next. Notice we are down at that big 9-0, almost perfectly finished at that point. So the century marks in currencies sometimes can present support or resistance points. I know the 90 is a big one on the dollar. And so the bounce off of it, which I can't really put a support line here. We're looking at the, actually, let me jump back to the, I'm looking at the 5-minute chart here just because I wanted to see what happened towards the end of the day. It was just a big sell-off. Unless we tested down, this probably had something to do with the rip that took place in other markets. But so the global story is the meltdown of the dollar. It shouldn't surprise anybody that's listening to my calls, because honestly, the more debt any country takes, the most devaluing it is to their currency, right? So we don't, since the blowing up, if you will, of Bretton Woods, which is where all countries had, at least developed ones, got together in the mid 40s and formed Bretton Woods policy, which essentially pegged all currencies to gold. And then we blew everything up in the early 70s by detaching from that. So the currencies could actually trade in these countries on their own merits. Anytime a country takes on more debt, it typically is devaluing to the underlying currency, right? So as the sell-off in the dollar has taken place, and we've talked about this ad nauseum on my calls over the course of the last quarter, so this should not be a surprise to anybody that's been listening to these calls. But just looking at the daily chart here, we broke under, tested against the big 92 area, which was some serious support, which will probably be some serious resistance if we can actually come back up against it. At this point, if the bill gets passed, I don't think we're going to see 92 for a while. So I think we're probably headed down, moving just the weekly chart, probably headed down to first stop would be the 2018 low, which is right in the low 88 area. But ultimately, I think we're headed down to the 86, 85 area. Anywhere in this whole area between like 84 to 85, this is multi-decade support points. Huge pocket of the stuff right around 85. So what does all this mean? It means that if you're trading a currency that is directly correlated or includes like the euro US dollar. Let's move to that next. Jump back to the daily chart. If you're trading any currency that is dollar denominated, let's just say in any form, front or back of the currency pair, it's going to be having issues, meaning that, as I've talked a lot, when you have an area that's presented a good balance, if you will, um, some people call it basing, balancing, whatever you want to call it. It's usually bounces between a tight range, right? When you break out from that point, you have a textbook test against it. That's what this one red candle is here. It's just textbook breakout, in my opinion, on a daily chart. Anything that's a breakout on a weekly, monthly, or certainly daily, these have a heck of a lot stronger type of chart patterns that you can bank some coin on. So when it broke, I was talking significantly about if you're accepting trades, I'd just be a lot less inclined to accept any potential sequence that's a short right after the break, right? Just like we spent a little bit of time, I guess arguably, Desan squeeze zone could probably position I don't know, maybe a light resistance line here. Can't imagine it would hold much because ultimately I think we're headed to the 125 area. Corresponding. Been talking a lot about that, but figured I'd just refresh it again. We broke out. See how these two candles formed from a whole bunch of dojis. These dojis are really just candles that look like they have no base to it. They're just double-sided wicks. What that is an indecision candle. We broke from that. I would not again have been accepting a lot of shorts up here. The software's trading for you. Obviously, there's not a lot you can do, but just against the daily chart breakout, we have other software like Arrow that does other things that you're going to want to follow their trading, but just understanding generally what's going on from a macro perspective in money supply, central banks, news events, keeping your risk mitigated because you understand what's going on. That's kind of my role right now. And dig a little deeper into some of the softwares and so forth at some point down the road. But but I'll tell you, it's all of our software haven't been paying as much attention to Einstein and Alexander, but all of the other software that we offer at this company has actually done really good last couple of weeks, guys. They really have, depending on your settings. And most of the stuff's just default settings from all the software set on a conservative type of settings. They've done well. It's hard to argue. One of them's had a week that's been, or last 2 weeks, I should say, Gearbox. It's had a week that's done so good that, you can see all this in the Facebook groups or the Telegram channels for the performance of the FX books of any of the stuff that multiple accounts that Desan and Tyler are running. But it's all out there. So, and these guys aren't doing anything crazy with the software. In the vast majority of these cases, it's being run in conservative settings. Changing the currency pairs up a little bit here and there, keeping the high win rate, low volatility currency pairs high on the list, right? So make sure you tune into their calls. So that's the story of what's going on in the euro. Let's take a look at GBP. So again, I always like to start with either a weekly or monthly chart first, right? So I can get a feel. This is the weekly. Get a feel for where we may be headed if we continue trending up. You can see draw some pretty defined trend lines on the bottom and tops of this movement upward. Ultimately, probably looking to take us somewhere in the 42 area would be my bet. Notice we've broken above, especially on the weekly chart, we've broken above the 200-day line. Everybody's got their favorite moving average line, guys. Some are much, much smaller than mine. But as far as just big picture analysis, the 200-day, in my opinion, is one of the biggest. So you want to always have that line on your chart because there's so many others that follow it. Becomes a self-fulfilling prophecy, right? As we've broken above it, so I would expect it to continue on up at this point. Now, obviously, if this whole Brexit deal falls apart, and I hope it doesn't, because frankly, I'm getting sick of hearing this for many years. I'm really sick of it. Just get the damn deal done, get some trade agreements negotiated with the Eurozone, and be done with it. But there's a lot more involved, because it's a much more complex economy than 1950. So that's kind of my thoughts. Drop down to the dollar or the daily chart on cable here, and notice I tell you, the beauty of the sun squeeze zone, which is what these red and orange lines are. Some of the black ones I drew, they're really pretty good. And I love how they just automatically show up. So you're not trying to like figure out, where really is support and resistance. There's, a whole bunch of factors that go in that. If you have TradingView, you can go into the settings. You could play around with some of the defaults, change the style, change the inputs. There's a number of stuff. I just keep it on the default settings. All right. So we got DXY, UP, USD. Let's take a look at Euro JPY. If you guys want me to look at any currencies, this one looks like it's going to break, but really only because the euro has been rallying. So it's always harder for me to pin where the yen's headed, obviously, because it seems to be trading in sort of a pin action type. But if you look at USD JPY, it's still arguing for trend, right? You can even take these lines, which I probably should have done, and extend them. You can always play around with these lines, but as long as you're getting it at least close to what's going on, that's really the key. Idea behind putting trend lines is you kind of want to line them up with where the bottom tips of these wicks are showing up. So I could arguably take this and drop it down a little bit too. Right in there, just generally, it doesn't have to be perfect. The idea is that anytime we're getting back down towards the bottom of the trend line, more than likely we're going to bounce until it breaks. Every single time we've gotten to that point over pretty much the whole damn last year, the market's reversed and gone back up to the top of the trend channel. So knowing that, if you're accepting trades manually of any USD yen stuff, just know that as you're getting closer to these, higher chance win rates are going to be to the opposite of the bounce off of or from or down from or up to the trend lines. Well, there's a good question. It was just asking, euro rallying is kind of weird, isn't it? Not really. I mean, because with the lifting of gold, I don't know if you guys have seen this chart. A lot of people on all these financial channels, whether it's Fox Business, Bloomberg, CNBC, or whatever business channel you watch outside of that group. A lot of the yahoos that are on here prognosticating like, oh yeah, it's the end of gold. Bitcoin and gold are headed down, right? And I said both of them are probably headed up because, well, in Bitcoin's case, it's a complete mania. It's probably going to end tearfully like it did when we hit 20,000 the previous time, which is many years ago. But gold's the real deal. And a lot of people are seeking this refuge because of the fact we've had weakness of the dollar and many other commodities. So it shouldn't be a surprise if, for those that understand correlations between different markets, that if the dollar is leading the world around right now, as it is, I'm going to show you one other piece on this as well. It's a different way of looking at a chart from one of my buddies that I trade with. So this is Mark Newton's version of the US dollar. Now he's got all kinds of other stuff on here, but the important takeaway is that the biggest development this week involves the complete implosion in the US dollar, which is now nearing a 2018 low. So it's a weekly chart showing major lows from 2 years ago. So, we've been talking about this a lot. You can see his straight down line on his candlestick charts are a little different than mine. So he's got them black and white, but whatever. The point is that the analysis is we're headed lower to what at least he sees is midsection support line if we were to draw a profile through this and we had decent volume to go on, you'd probably see that the point of control from this period of time is probably somewhere in the center right here. So there is a chance, volumes are lower during the holidays, but there certainly is a chance that we may stop here for a bit and consolidate. But just know that if you guys start seeing a whole bunch of dojis, right? Doji candles, mostly wick, top and bottom, very little body, right? You know that it's an indecision candle, meaning that it doesn't look like we're going to reverse, but we're probably going to continue the trend after a little bit of a pause. So, all kinds of stuff there. So stop analyzing this because our brains are going to blow up over the holiday. Let's take a look at USD CAD. So we're basing down in here. Bring this up in the screen. So just looking at the daily chart, let's take a look at the weekly. Notice we've got to go to a monthly chart to see where we were last time we were back down in this area. And you're looking at just like the dollar. Notice when we're having to go back to 2 years ago to see where the levels are. And the big one's 22, just under the 2,300 level for USD CAD. More than likely, we're probably going to be magnetized to this level. I don't know when, I don't know how long. We could balance once we get there, which is being my assumption. But just know as we get more than likely going to be pulling to this, unless we get some stuff from different governments in terms of bailout packages 2, 3, 4, 5. All bets are off on a lot of my analysis. Remember, one of the most important things is being a risk manager is you can always be wrong. So, oftentimes I'll actually have a really big meeting with a huge potential client, Florida retired senior partner from a big law firm. The guy's got about 8 million in equities, and he has all the ego in the world because most of it's Apple and Google and Amazon, and he's got a whole bunch of Zoom like we had, and just has that arrogance. And I asked him the other day, I said, well, what's your strategy if you're wrong? He didn't have one. I said, well, don't you think that's a problem? He's like, well, that's why I'm talking to you. But it's always difficult when you're dealing with a highly appreciated equity portfolio. But the point of any of this is any risk management is, put the ego aside, right? Doesn't matter how many awards you've won, how many degrees you have. I've had some of the smartest people come in thinking they are God's gift to trading just because they were CEO of XYZ company and just fall completely flat on their face and lose hundreds of thousands of dollars because they're unwilling to leave their ego at the door. Now, I obviously that applies to more indiscretionary trading, but I really think it applies to almost everything in life. If you're willing to open up yourself for coaching and education, and you can put the ego aside, you are much more in tune to learn in whatever capacity you're looking to educate oneself. But mostly just getting different opinions and, sort of being humble about it all. But you still have to have that I hate to lose mentality. So let me just take a quick peek at USD because I wanted to make sure you guys saw this. This is the daily, but notice all these dojis down there. I had to go all the way back to the monthly chart to kind of show you guys on the long term. We're coming up to a big area. Again, this area is so big, we haven't seen it since 14. Okay. It's right in the 88 area, almost perfectly 8,800 area. So just know that's probably where we're going to bounce from and or take some time, I hope, and balance out down along this area if we in fact can do that, more profitable for martingale type strategies. Okay, so got somebody asking for my email. Everybody is like, oh no, here comes Steve with the diatribe again. Here's the bottom line. If you send me an email, and this is non-negotiable, by the way, guys, okay? If you send me an email, I need you to have your account hooked up to my FX book. Don't hate me. You'll thank me in the end, It's like I always say to the kids when we're punishing them, trust me, you'll thank me in about 20 years. Hook me your account up to my FX book. Make sure that it is unlocked, which means you log out. You click on the link that you're going to send me, and you take a look at what it shows you. If you're all locked up in personal information, unlock it, please, so that I can see it. I do not share anybody's FX books with anybody if you send me an email, but I need to see that so that I can peer inside to what's going on inside the account. I can't be your risk manager if I can't see what's going on, right? You could send me 10 paragraphs of what went wrong, but if I can't see the actual trades being executed and what the settings are, I can't help you. So there's email. It's in the chat window. All right. How will the stimulus bill or lack of affect the strength of the USD? So, Roger, that's a good question. Basically, if we don't pass a bill, a lot of people are going to suffer more, which stinks. If we do pass a bill, it's going to devalue the dollar even more. That's simple. How long, for how period of time, where's it going? And, this is all prognostications from yours truly. I could be dead wrong in my prognostications, right? But generally, that's usually what happens. What does a reversing candle look like? A reversing candle is what I like to call a hammer reversal. Here's a good example right here. If you're looking on this monthly chart of a USD Swissy, see if I can make this a little bit bigger. This is what it's not necessarily perfect, but on a hammer reversal means that it came way down into a given area. This could look the same on a candle going up as well. But then it has a big reversal, usually on higher volume like you see here, and it finishes somewhere near the top. But I would just Google hammer reversal. That's not the only reversal candle that's out there. My favorite is a shooting star and what's called an island reversal. It's where you gap up outside of some period, kind of like looking at a Tesla chart from the last few years where it'll just gap and run and then have a big reversal, which I think very well could be the case. So all of you folks out there in equity land that have been gorging yourself on Tesla and your Robinhood accounts, be real careful, folks, because this thing's in the S&P now and they can peg it. So the options guys can terrorize the equity owners just by holding the ETFs hostage. I'm not going to explain how that works, but those that are wicked heavy in Tesla, like somebody I met the other day, I'm basically telling them to lighten up, period. You can see, and maybe right. Let me double check that. Let's try again. All panelists and attendees. I always forget to do that. Try it again. I'll spell that right. S Federal at Auvoria Prime. Sorry, the default for some reason in Zoom, you think I would learn this. I can't seem to get this straight. The default in Zoom when you're a panelist is if you're going to put something out there is it just goes to all panelists and not attendees. So there's the email in the chat window. So let's take a look at the next question. Stiff, looks like you came in late, my brother. Either that or you're just terrorizing me with asking me questions that I've already answered, dude. Is the Canadian snow getting to your brain? Just kidding. So Euro US dollar, Sif, we have to get you to come in on time before, brother, because we're holding up the crowd, dude, right? Just kidding. Sif's a good guy. The chart here. So I'm gonna jump back to, I'm always start with weekly or monthly and then go to daily. Whoops, let's go to daily. There we go. So we had a real good period that we were basing inside and we broke out. This is your big trigger candle right here to let you know that we're probably going to rip up and barbecue some shorts, which we did. Many dojis, which tells you indecision, ripping up again. This is all due to, and notice some of the volumes on some of this stuff. Again, we don't hold that much credence in volumes just because I don't know where the hell the data sources are coming from. Although the Trading View guys send me emails every week begging me to talk more about volumes, but I can't get these guys to demonstrate where the hell that's all coming from in the aggregate. But this pattern has been quite clear, and the reasons for it very simply are the weakness in the US dollar, all related to potentially the two sides coming together and giving us bailout package number two. It's that simple. Next questions. With the software, since we invest by lot size, if I have $1,000 or I have 10,000, I'd earn the same amount on a 0.01 lot size. So if I stay on conservative, see, now the problem with that, you would earn in a perfect world the same amount of return in those accounts, but since it's a larger lot size, I wouldn't guarantee that. It just depends on your Forex broker, how good of executions you're getting, right? I mean, there's so many variables in answering that question. But in a perfect world, yes. Yeah, the next question's on squeeze zone, tradingview.com. I have the pro version, which isn't really any big deal, guys. It's about $20 a month. It's great, right? The software can damn do near what Bloomberg can do, which made Mr. Knucklehead himself a billionaire. And that damn terminal is almost 2 Gs a month, which means you get your own keyboard. Great. But it's just good, I'll tell you. All right, so it is squeeze zone on Trading View. Yeah, this was built by Dasan. He's actually really good. I try to just have just basic support and resistance points on the chart, and plus the 200 moving line. Good question, Brent. People talking about how December there are lower volumes, but volumes seem the same, especially with your volume indicator. Yeah, that has been true up until last week. That's actually a good point. Volumes are typically lower, um, but I think that there's been a number of events that have brought some additional volatility. Volumes are higher because equity markets globally, even emerging markets, by the way, guys, which have totally started to outperform developed markets just in the last couple of months. But anything that is non-developed markets, and by emerging markets, we're talking about countries like Brazil, Russia, China, India, what they call the BRIC countries. Many of these emerging markets have actually really been outperforming. I think a lot of it has to do with just cheap global money and the fact that they've lagged developed markets. It has something to do with volumes, which have been quite high in that. But typically between Christmas and New Year's, volumes are down. But there's a lot of big deal events going on, bailout packages, lockdowns, a lot of things that's got markets disrupted somewhat. But at the end of the day, I think a lot of people are surprised that how powerful central banks can be in lifting almost all asset classes if they're dropping enough what we call free money coming out of the skies, right? Flying really in the face of this. At some point, the music's going to stop. And I think we're due for a pretty big correction next year, depending upon how effective these bailout packages in these countries are at bailing out some of the folks that have been out of work and some of the business owners that have gone under over this period of time, which is sad. All right, so let's make sure I answered this question right. So we'll typically recommend, and I break a little bit from the developers. I break a little bit from a lot of the team leaders because, frankly, in this period of time, unless you're trading super conservative pairs on those types of settings, I prefer to be a 0.01 lot size all the way up to $5,000, in some cases 10. So put it this way, for the clients that I have running the software in their own Forex accounts, I'm about a 0.01 per $7,000 with default conservative settings set. And in the case of myself and a couple of clients, I'm 0.01 per 3K. And that's only because all of us individuals can totally afford to lose it. So we're willing to take a little bit more risk. That answers your question. Let me take a look through the chat real quick. Yes, Merry Christmas to you as well. USD CHF. Let's take a look again. Let's go back to weekly charts, monthly. So you're looking right now at the past 18 years USD Swiss. And, obviously some of this was related to just events surrounding financial crisis, which we'd mostly come out of. But we've spent a really, really long period of time basing. And it looks to me like it's going to break. It's really just because weakness of the dollar. That's simple. All right, guys, coming up on 41 after the hour. Everybody's got any questions, anything? Let me just show you one thing I promised. So many of you have heard me talk about Wyra Harris. Okay, this is his LinkedIn profile. Wyra is probably one of the smartest retired CME traders I know. He is exceptionally well connected. I mean, literally like speed dial to Ben Bernanke and, past Fed governors and Treasury secretaries and stuff like that. So if anybody's like super plugged in, but he's just a very humble guy, he writes a blog called Notes from the Underground. It's a very simple blog. I'm actually going to drop this link into the chat box if you guys want to bookmark this in your financial bookmarks. It talks a lot about FOMC, which is the Federal Open Market Committee. It's a division of the Fed. Jerome Powell, obviously heading the 12 Fed regional governors. But really, he talks a lot about just big macro events. How does the ECB or the IMF affect the trading of the euro? How does Brexit affecting the Eurozone trade policies? He keeps it pretty simple. This is super quick reads. But this guy's following is like legendary. I mean, like billionaire hedge fund guys read his stuff, right? So this is a good blog I'd tune into if you want to get. I pull some material out of this when I'm talking about this because we want to keep it macro and real big picture here, getting everybody to understand how the money supply globally works and affects currency rates and other markets as well. So I'll leave you with that. If you want, since I got a couple questions on Mark Newton. So this is Mark right here. He speaks a lot on Maria Bartiromo's show. He's a good guy. He owns Newton Advisors. This guy has just been a spot-on technical analyst. You can follow Mark if you want. Here's his link. One of these guys I'm going to try and have on the show coming up. There's Mark's link to Twitter if you have a Twitter account. And I think that's it. Last one. So last question I got is, yes, there are newer versions of software coming out. I think the deep versions or the extensive versions, a lot of the developers are working on that are bringing about a lot more stuff are going to take some time because, as I mentioned, for almost a full quarter now, I fully expected it to take some time to get bugs ironed out between VPS conversions and getting the software. Most of these softwares were developed in a vacuum. Not that that's a bad thing, but they were never deployed on a broad-based VPS among thousands of subscribers. So it's almost inevitable that things are going to pop up. And yes, we certainly could have done it with a small sample size of 30. But maybe that's a mistake we can learn from and, release it and or switch, VPSs over on the weekends. Not well, people are in live trades, but live and learn, right? So, all right, guys, I'll wish everybody a very happy holiday. May Santa bring you all you asked for if you follow Santa. And I wish everybody a safe and happy holiday. Merry Christmas, Happy New Year. I will see you guys on Tuesday.